Yo, what's good? So, in this video, I'll be breaking down Canadian dollar Swiss franc swing trade that I called in my group, and this is using my key level confluence based strategy that I do have and I do use. I'll explain the components of it. Drop a like and subscribe if you want me to drop this strategy for 100% free and do a series showing you how this tested strategy can help you in the forex markets. I don't know, maybe it'll help you or something like that. Um, just dropping, video by video of the different components of the strategy, but you gotta drop a like and subscribe in order to get that, right? Moving on, we will be breaking down the trade real quick from the fundamentals to the data, because my strategy is data based to the technicals. Okay, so starting with the fundamentals, you did have, and this is from capital markets, and you did have the Swiss franc. Their one personal 1 to 3 month outlook. Typically, I'll get these institutional reports, and I only mess with like a couple of central banks. J.P. Morgan, Credit Suisse, RBC, Capital, and Capital Markets, and a few others, and that's it. Everybody else, I don't pay attention to, because these guys are going to be like the most accurate of these are going to be the top dogs, long story short. So this is an institutional report from RBC Capital. 1 to 3 month outlook on the S&B done. Euro Swiss franc has settled into a very quiet range, while USD Swiss franc has sold off hard, minus 8% since early November. This is the pure USD move. Analyst consensus is bearish on the Swiss franc. The argument is inflation in Switzerland has peaked, and it is a lot lower than everywhere else in the world. That's a positive on their end. The S&B is done, and therefore Swiss franc should underperform, right? Those who disagree generally look for Swiss franc to outperform as a haven currency on a view that the world is going into a deeper recession in 2023, which based on what I've been hearing, they are. And the low-yielding traditional safe haven, Swiss franc and JPI will be obvious beneficiaries. Showing that basically these guys, and while the rest of the world is going into a recession, Japan and Switzerland have a history of having very stable economies even through hard times, very resilient economy. So what they're saying is basically that people, they will be, Swiss franc will be benefiting from everybody else being in a recession, because it'll make their country and their currency look better, and their economy look better. Their currency will be not weak compared to the rest of the world, right? We think that the S&P was sensitive to currency weakness, and if it starts to materialize, it will just adjust its rates outlook accordingly. In particular, with the English Central Bank turning, that's what ECB stands for, turning markedly more hawkish in December, the S&P cannot afford to let a widening yield differential push U.S. Swiss franc much higher. So their yield differential is kind of what they're looking at what would be something that would make the euro appreciate over the Swiss franc. If Swiss franc is supported by general risk aversion, which means that during times the USD and the Swiss franc are the most gone to currencies where institutions invest their money, during times where maybe the USD is unstable because of current inflation and recession, obvious recessions. We're going to be going into a mild recession in 2023, pretty much starting this month. So kind of start to feel the effects of it, and there's been negative S&P, negative CPI, which is the inflation reports. There's a bunch of evidence on these reports supporting the current recession. So coming in for the United States of America. So while USD is bearish, everybody else will be bullish. So that's another comparison as well. Technically, bearish sentiment has increased for USD Swiss franc after breaking support, which means the USD bad news that I just referred to was going to make the the USD compared to the Swiss franc drop, right? Because you're literally comparing two economies. After breaking the support line, a trend line dating back to mid 2021 at 0.9345, the long-term trend reversal now shifts the focus down for 0.9195, right? This is the analysis of a central bank, right? Investment firms and things like that, followed by, and you can use evidence like this and economic things like this to support your trading idea, right? It's called fundamental analysis, right? Before you do the charts, you should be looking at stuff like this. Followed by 0.9086 and 0.9019. Resistance is now located at 0.9346 and 0.9373 with a return above the 0.9600 area required to nullify the downtrend, right? They talk about Euro Swiss franc specifically, right? Now we're going to go look real quick, and I won't read the entire article just for time purposes. the Canadian dollar, right? So Swiss franc overall, you know, they do have a little bit of bearish sentiment, but overall, they're saying that the Swiss franc is going to outperform the rest of the world in terms of their economy and things like that, right? Because they think that inflation has peaked as well. So, right, we're comparing two economies, so we're looking at the Canadian dollar. So these are also things right here that I'll explain quickly. Basically, supporting the decision, right? I'm just going to highlight the important parts of this. The economy is planning on hiking rates 25 BP. So basically, that's them fighting inflation, and this does damage to the economy. Even though 25 BP is not bad, with the U.S. doing 50 BP rate hikes currently, we drop down to that. It's still going to affect their economy. The Central Bank of Canada, basically moved away from focusing on inflation, be more bifurcated approach that seeks to balance inflation with a growth slowdown that is gaining momentum as a lag impact to prior rate hikes work their way through the economy, right? This is what they mean, right? Rate hikes are negative for the economy, right? So the late rate hikes that they had to do all year are going to catch up to their economy, and that's going to put them into a recession, and that's exactly what's happening with the USD now as well. It actually said, and it was a quoted statement that federal chairman Federal Powell in the U.S. said that it's impossible for him to reach his 2% goal without decimating the job economy. So the time to assess the impact of prior rate hikes, they need time basically in order to assess the damage done to their economy by prior rate hikes, right? When they were doing bigger BP hikes and rate hikes. A recession will likely lead to bouts CAD weakness, right? So they're saying that a recession, based on the evidence above, about the rate hikes and things like that, and affecting the labor economy, basically similar fundamentals as the USD. Basically, the first half of 2023, Canadian dollar is likely to be weak due to these economic factors, right? So that gives me my trade idea for Canadian dollar. Selling the Canadian dollar versus the Swiss franc. Swiss franc's doing pretty good, and the Canadian dollar is not doing so good with inflation and everything, right? So this is actually how professionals do analysis. They use fundamentals and then go and execute that trading plan, and sometimes data, and then execute the trading plan on the charts, right? So scroll over just a little bit. So yeah, there's a few economic factors that are here. They have a 5.3% inflation rate, and they have budget balance target percent declining over the business cycle. Their GDP growth is actually not terrible, but it's lower than expected. And they have a negative GDP Q3 account balance. So it's all bad. That's all negative things for their economy, along with the evidence said here as well. Let me scroll over real quick. RBC Economics expects their economy to begin a slow recovery from a recession in the second half of 2023 through 2024. It's a very slow recovery from a recession to the extent that this coincides with the broader global rebound. CAD should be on course to recover, given a cyclical nature and linkage to improving commodity prices. This is reflected on newly introduced forecast for 2024. So CAD, going back to the Swiss franc, just to show you the trade predictions for these guys. Here it is. For these guys, is they have CAD Swiss franc going from 0.67 in Q1 all the way down to by 2024 down to 0.63. So it's an opportunity to potentially swing trade based off of these fundamentals, right? You could do Euro Swiss franc selling all the way down, all the way into Q4 2023, and you can use these as a swing trade opportunities to catch 5, 7, 10%, which would be a fraction of a percent of that move, right? They're backing these trade ideas right here, up with the fundamentals up here, right? Pretty easy. So now we go to the data real quick. They have 96% of retailers actually buying this pair, and we always trade against the retailers. Currently, they're net negative on the CAD, supporting with the fundamentals, and this is new data here for the bullish predicted candles, but at the time, they did have bearish predicted candles. So I hold this idea to be true in terms of the sell that's going to go on, right? If I'm wrong, I'm wrong. I'm only risking 1%, right? So far, though, it is a correct trade and a positive trade. So this is based off of weekly key levels, as you can see. This green line right here is a weekly low that I would be initially targeting, right? So that I drew basically another a trend line right here and turned to green to mark the weekly low, right? Dropping down to the 4-hour, which is my entry time frame, right? At the time, they had a bearish rejection over 068.152. And this has been a continuous bearish trend, as you can see on the weekly, on the daily, and on the 4-hour, right? It's been a very continuous weekly bearish trend. The Swiss franc has been held up pretty well during COVID, right? So right here in this area, we have the last time it was bullish, is basically a retracement that took liquidity right here. All of the red trend lines right here are all going to be where liquidity either lies or was taken, right? So you can obviously tell that price took the liquidity here, had a continuation, right? This is how you basically use support and resistance or key levels along with knowledge of liquidity in order to benefit from and be more accurate with support and resistance, right? Liquidity was taken here, and I forgot, I didn't even see that right there. Liquidity was taken here. Get over here. And then you had a continuation. You had liquidity taken here, and you can see how liquidity was moving. Liquidity take, created liquidity right here, liquidity take here, they created liquidity right here, liquidity take here, and price just kept repeating the process over and over again, right? There were multiple pools of liquidity. I would be sitting here all day if I marked them all up, right? So last thing that happened was that price actually broke structure right here and took sell side liquidity. And next thing that they're going to come for is buy side. They also broke this key level right here, which is a weekly key level. So that's a lot of confluence right there. This bullish trend line actually got broken, which is a sign, obviously, that they are shooting for sell side liquidity, which I've marked up, and you can see where price broke through that, right? At that point that they did that analysis at Fibonacci confluence, right? This is the bearish trend line. This is the bearish trend line that was respected along the trend, as well as the bullish trend line being broken, signifying in this demand, and this failing basically, and they took the liquidity right there. So I knew at that point to do a market execution right there. And actually, no, I did a limit order, right? A sell limit that once this was broken. So like I said, if you want this strategy for 100% free, drop a like, subscribe. It might help you trading. If not, and this video is not valuable to you, don't subscribe, I guess.